I bid you all good morning, good evening, and good night to whoever watching this transmission is Mike Martins. Guys, thanks for joining me. Thanks for being here. Guys, man, I have an article. If you're following me in the housing market for the last 10 years, and we've been discussing with the trend, everybody thought the market was going to crash after the 2010 Olympics, man, where they were wrong, man. They sell at the wrong time. But now, the banks. What is the banks up to? Well, this is a huge one. You got to share this one. Get this one out there, because I have an article and a half and a quarter to share to you guys. You guys have no idea. So here it is, guys. Let's go over to article scan here real quick. Guys, don't forget to set your reminders for trends in the housing market tomorrow. We will be discussing this topic in depth, and Mike in the Night on Saturdays, and we got all the shows here for you guys to set your reminders to. Don't forget to set your reminders, even though YouTube hasn't been sending out reminders to anybody lately. A lot of people complaining about that. Even some people on our side have actually contacted YouTube and asked them what the heck is going on. So here it is, guys. 5-year fixed mortgage rate in Canada falls to 1.99% for the first time. That's huge. But why is it not a surprise? It's because first-time homebuyers. They need to get fresh blood in the market. The locals can't afford to compete with the laundered money. And what am I talking about? World economy would collapse if the City of London stopped laundering money, says HSBC whistleblower. This is legit. He came out and lots of documents to prove this. You guys go ahead and read that on, right there it is. It's on Sputnik News. Of course, you need another foreign news power to actually cover something like that, or a news establishment. So here it is. 5-year fixed rate mortgage rate in Canada falls for 1.99 for the first time. A mortgage lender for the first time is offering Canadians a 5-year fixed rate below 2%. So they're hedging against the potential loss, and hopefully in the 5 years it might bounce back. But the amount of actual Canadian property that's leaving Canada is beyond. I'm thinking this whole COVID thing and closing the borders. I saw a whole thing. I'm not kidding. I saw a whole article the other day posted that 97% of Canadians want to keep the borders closed indefinitely from the Canada to the U.S. indefinitely for the rest of the year. No one asked me that. Open the borders. Everybody get out of here. HSBC has dropped its 5-year fixed mortgage rate to 1.99%, the lowest ever, though the rate is for default insured mortgages only, according to mortgage comparison site ratesbuy.com. That's what they're saying. It could be for default mortgages only. So basically what HSBC, now they're going to play their joker or their wild card. They're going to throw that on the table, and the other establishments are going to say, well, we'll do it for people that are not in mortgage distress or mortgage default. And then the other bank's going to say, yeah, we'll do that too, and we'll give you 1% for 5 years, and then that's how it's going to start. And this is the domino that gets knocked over first. The uninsured 5-year fixed rate is roughly 2.29%. In the first quarter, 96.6% of the default insured borrowers chose a fixed rate, said Canada Mortgage Housing Corp. Last week, the government-backed Canada Mortgage and Housing Corp said it would tighten rules for offering mortgage insurance from July 1st, after forecasting declines between 9% and 18% in home prices over the next 12 months. So Canada had a very sure-proof plan in place. Canada was working on, instead of bringing in talent and actual people that are going to actually produce actual production, real production, Canada's been binging on foreign money. Canada's been binging on foreign money now for a while to keep the housing market going for almost 15, 16 years. Canada wants more Chinese worker students, tourist minister says. So you go down here, Canada's competing for $500,000 per year, and opening more visa offices could help Canada compete for Chinese worker students and lucrative tourist business. So this is, I don't know, it's kind of interesting to see how it's all about the money, but then what about the people that built the infrastructure from Europe? They just get mass deported from Canada, right? You could watch other videos I have on that. So here it is, guys. So So now that China has these massive capital flows, disallowing money, and then come I think it's July or August of 2020, China is going to only allow people from mainland China traveling to take travel expense money only, like $100 a day, and that's it. You're not buying property in Ireland. You're not buying property in Scotland. You're not buying property in Australia. You're not buying anything anymore. So now Canada is working with Hong Kong to see if it could get more people in from Hong Kong. That's why when I saw our Prime Minister flip the script against Communist China and said, no, Hong Kong this, we were with Hong Kong, I'm like, what? But it's all where the money is, right? The move would make it harder for riskier borrowers who offer down payments less than 20% to access CMHC default mortgage insurance. Again, risky borrowers, you could see a decline in that if prices go back if housing goes back to average wage earners. Average wage, not minimum wage. Average wage earners, 40 to 65,000 a year. They should be able to get into a home. But in Canada, in any major city, maybe except Alberta and like Edmonton and Calgary right now, Nova Scotia, like places like Fredericton and Charlottetown and stuff, you could probably still get in. But most of Canada, you're done. Even an hour and a half out of Toronto, you're done. An hour and a half out of Vancouver, you're done. You just affordability levels aren't there for Canadians, right? The move would make it for risky borrowers. So we got that. CMHC establishing a minimum credit score of 680 instead of 600, the group said in an emailed statement. So they're raising the beacon score. So your beacon score needs to be above 680. The average beacon score, I think, is around 700 in Canada anyways. I think mine's at 770 right now, or I think it's pushing the 800 mark, right? It will also limit total gross debt servicing ratios to its standard requirement of 30% of annual income. There you go. There's the punchline right there. Most Canadians won't be qualified unless they're making like 90 to 140,000 a year, and then the wife's making 90 to 140,000. Then you could get the total debt service ratio to 35%, because it used to be 44%, I think. Hold on. Compared with the threshold of 39% currently, the total debt servicing at 42% versus as much as 44% now. Total debt servicing, yeah. So it's got to limit that, eh? Well, it has no choice to do that. This is huge. This actually transformed the entire Commonwealth. This actually transformed Seattle. Here we go. So Canada, what happened with this? Canada's competing for more and more rich Chinese to come in and students. And then, so you go to here, and then you got this here from Douglas Todd. And this is a huge problem because the people that actually contribute to the infrastructure, why do you think cities like Vancouver are going broke in Toronto? It's because Aboriginals and whites leaving Metro Vancouver. A lot of these people actually contribute to the infrastructure, pay their taxes, and they're middle wage earners, right? So a lot of them are blue collar workers. But the problem is, when those people leave, you have investors come in and buy properties, and they don't even live in the properties. A lot of the properties remain empty, especially a lot of the posh real estate and stuff, and high-end and luxury real estate just remains empty. Nobody stays in them, right? So then let's go over to that other article. Chinese investors skip Vancouver and go to Seattle. Let's see if the article's still up. I think it was taken down. I think. See right here. This is from 2016. There's another one from 2016. So this is now Seattle's finished. Seattle, the affordability levels, and I love it how they blame the techies. Oh, it's the tech workers that's doing it. No, Asian investors shift to Seattle as new Vancouver tax takes effect. There it is right there. So the people in Seattle and then all the way down to Oregon, and the Northern California people moving to Oregon destroyed Oregon. Oregon's now average house price is $426. When we started this channel, it was $211,000. Seattle is the new Vancouver when it comes to Chinese housing investment. And I can't see this one because they want me to buy Vancouver. What does it say? Vancouver tax pushes Chinese $1 million to Seattle homes. So that's it right there, guys, and basically what's happening. So why 5-year Rick? It all ties back when you go back in the channel. If you go back in the channel and actually start to see what I'm talking about, and you go to the little magnifying glass here and you click investors, and you'll find all kinds of stuff here. Chinese investors buying up Athens, Chinese buyers abandoning Australian property, 45 billion owed by foreign investors. Those are people that take credit cards out and then they take off and then they don't pay them back and they go back to China. Vancouver housing crisis, foreign investor must watch from 3 years ago. This goes back almost a decade of just information of what we need to talk. Rest in peace, Canadian housing market. All kinds of important stuff, guys, that you guys need to get a grip on what's happening with the economic takeover of our country. Now they're going to have to, for the people that are defaulting, need a little hand, so they're going to start lowering rates, and HSBC is going to make that back for document fees. HSBC ain't dumb. They're going to start making that money back for document fees. They're going to make that money back from appraisals and sending out this and sending out that and doing inspections and getting it done, right? And then when they get that done, they kind of recoup some of that money through $7,000, $8,000, $10,000 in closing fees. And for 5 years at 2% VIG, depending if you're borrowing $1 million, it is worth it. But if you have $140,000 left to pay on your mortgage, I wouldn't recommend. I don't know many people that have anymore. Everyone's balance that I've spoken to is over $400,000 to $600,000 owing. And that's that, guys. Please share this video. Get this out there. We need to know what's happening. This is economic takeover that's taken over. Canada is like, I don't know where it's going to go. Australia is way beyond that, too. If you guys think in Canada, wow, it's bad. Somebody asked me, should I move to Australia, Mike? It looks like it's doing bad. No way. Can I get some of my friends down under right now to comment below for a Canadian looking to move? The Australian will tell you, get to the U.S. if you can. And that's why I think Canadians demand borders closed till the end of the year, indefinitely, maybe until summer of 2021. I read that article. I'm like, what? No one asked me that. I want to go to the U.S. and take my kids to Disneyland. Like, you know what I'm saying? Anyways, comment below. Let me know. Lots of love. Thanks for watching.